What should you do as an Elliott Wave analyst who is keeping real-time track of a market if a rule does appear to be broken? Well, there are only three, so this is pretty easy to deal with. If wave 2, what you're counting as wave 2, makes a new low, it's not wave 2. It's something that's part of the preceding corrective pattern. The only other two rules are that wave 3 should not be the shortest and that wave 4 should not overlap wave 1. Now, just for convenience, I drew a chart, a developing price pattern, which would suggest that both of these rules have been broken. And I can't tell you the number of times I have seen analysts in print or otherwise say, well, look, this is clearly 5 up, even though there's overlap and the third's too short, you got to sell this market short. But all they're doing is selling themselves and their accounts and the wave principle short, because the wave principle says this is not a 5-wave structure according to the rules and guidelines of the wave principle. What should you do when you see this kind of development? How should you think? If you have taken a very close look at the wave structures and the real-time charts that we've been looking at so far, you will see that in almost every case, the resolution of this kind of early beginning is the same. Don't label this first wave, second wave, third wave, fourth wave, because wave 4 has overlapped wave 1. That 4 is not allowed. Even if wave 4 had not overlapped wave 1, suppose wave 5 were developing, at what point could you not label that wave 4 and 5 anymore? As soon as wave 5 is longer than 3, because wave 1 is already longer than 3, and that will make wave 3 the shortest. That count is wrong then on 2 major points. What is happening in almost every case is that in truth, this is a developing third wave extension. Remember, third waves are usually the longest in a sequence. Therefore, they tend to subdivide 1, 2, 3, 4, 5 very clearly before they are over. And the ultimate correct labeling turns out to be that. In other words, someone had labeled this 1, 2, 3, 4, and they were trying to get a 5 out of here, already having broken one rule when wave 4 overlapped, and then another rule when wave 5 got too long. What is the practical result of breaking those rules, of putting one's opinion before the wave structure? Well, what's this guy doing right here? He's selling short. He thinks the market's going to go down and correct from here. What is it actually setting up to do? Right in here, there's probably a 2-day pullback that convinces him the high is in. But actually, the market is right on the threshold of the third wave, the most powerful upward section of this entire advance. Just when he should be the most bullish, he's turning bearish because he got lazy or dishonest and didn't follow the rules. There's only 3 of them, and they're easy to follow if you keep them in mind. So the right thing to do is label this as a smaller 1 and 2 of a developing third wave extension pattern. That one little picture should keep you out of trouble of mislabeling waves virtually all the time.